Welcome to our feature presentation, Best Trading and Investing Potentials for the year 2023. For 2023, we see another year of volatility. So that means radical price changes, a lot of short-term moves. Long-term buy and hold will certainly not be the strategy for 2023. That even rhymes. What are the critical factors for the stock market in 2023? During the pandemic, trillions of dollars were printed for worldwide economic easing that need to find a place for producing a return. And this far, the stock market provides the highest yield on the investment. The real estate market is also a market for good returns, but it is slowing down by higher interest rate and mortgage rates, and with that money that usually was flowing into the real estate market also needs to find a home and gives the potential to sponsor growth for the stock market. The index value of the S&P 500 is a multiple of the earnings. On the last quarterly earnings report, the average S&P 500 company came out 2.4% above expectation. So that's another growth potential that the market can realize. On the side of negative influential factors, geopolitical tensions, the war in the Ukraine, the tense relations with China carry a constant conflict base and putting the financial markets under pressure, and we are having the talk about a recession, and we'll come to that point. High inflation and ongoing supply chain issues will remain in 2023. And rising interest rates, on the other hand, also put the markets under pressure. So what we will have will be a news-based, news-driven, short-term up or down move in the market, providing short-term volatility we can participate in, and we'll show you how that can be done. But longer term, it is hard to predict where the market is going. And as said, 2023 will not be the year for buy and hold. Our expectation, in summary, a bear market, with strong down moves and radical recoveries, a sideways market, range-bound moves, and long-term buy and hold will certainly not be the strategy for 2023. So what will we do to participate in the opportunities that the financial markets provide? First of all, we're going to do short-term trading, swing trading and day trading. Longer-term investing, we are holding back here. We could say, are you going long-term short? Rather not. We rather participate short-term in upside-downside moves, limiting the risk. That's important. And we want to invite you to trade on mechanical rules by finding crucial price turning points for swing trades and for day trades by letting the chart tell when to buy or sell, and we provide examples for this. My name is Thomas Barman. I'm the presenter today, and I want to make you aware of the risk in trading, and that I'm here as a trader and educator, not as a broker, dealer, or financial advisor. The name Never Loss Trading comes from a concept where we repair trades, but never stop loss trading was a little lengthy, so it's not that we provide a system that never loses a trade. We are high probability trading and trade repair. So let's go on. Let us fill our short-term trading strategies for the year 2023 with life. Let us start with day trading. On day trading, we like assets where it's easy to go long or short, and futures provide a certain and solid basis for it. On the side of futures, we like the indexes, and here in particular the E-mini S&P 500 futures contract, crude oil, the euro, and gold. Those are our core focuses for 2023. Then on swing trading, we focus on stocks, ETFs, and futures. And on event trading, what is an event? The event we will spell out with you a little more in detail is the earnings report. 4 times a year we have quarterly earnings. There's opportunities to trade into earnings and out of earnings, and I explain those to you. And that's what we follow with stocks and ETFs, in particular with stocks. And I have some good examples that I can share here with you. Our algorithmic trading concept, which also has an AI component, is based on the following. Price is the result of a change in supply and demand. So it's a resulting, not a variable. So therefore it can be measured and it can be projected. And that's what we do, because the price leads to a supported or opposite move. We'll spell out price thresholds by the help of our systems, and we act on them when they are fulfilled. Yeah, our indicators extrapolate underlying changes in supply and demand and extrapolate where the price can go and spell out a condition, and only when that condition is fulfilled. I show you examples. In this presentation, I will share two types of charts. First of all, for event trading and swing trading, never loss trading top line. And on day trading, I share a concept which combines three systems, which we call timeless trading, because time is not a consideration. All decisions are made price-based. The time is now for earnings calls. Why? I'll explain to you. Earnings calls report about balance sheet issues of companies or opportunities, income statements, so how did the quarter go in relation to expectation to the last quarter and to last year, cash flow statement, and definitely also a performance report of how the company performs in the respect of their competitors or in respect to the overall market. All of these indications make stock prices move in anticipation of growing or slowing business of the company. The time is now. The next earnings season is approaching. And when is that? So January 13, JP Morgan will declare their earnings, and we'll tell you why that is very essential. And in the same week, Morgan Stanley, Goldman Sachs, and Bank of America. So the financial institutions will give a report of what happened in the quarter, which most likely will be good, but more important, they will give an outlook of how they see the economy and their acting. Then afterwards, we have the hype of the market reports when companies like Apple and Amazon come out. That's going to be in the week of January 26. So mark your calendars for some price action into those weeks and out of those weeks. At Never Loss Trading, we start to look about 20 trading days, 4 weeks in advance of the earnings call on price move indications to act on them. On the basis of the last quarter, we are looking how we trade into earnings and can capture those opportunities. So there is a pattern that we show you that you can learn and follow, and it's repetitive. It's going to come up again. And that's the most important issue. You can prepare with the indications on the chart and with strategies to act to the upside and to the downside, regardless of the type of account you are trading from, even from an IRA. The key is to control your risk and to leverage your returns, and I'll give you examples now. The line graph you see here on the bottom, that's JP Morgan's development, and this here is the S&P 500 index value development. So you see they're very correlated, while there was a margin between the two, and they caught up together. Yeah. So JPM January 13, mark your calendar, is the next to report, and we'll show you how to trade in and how to trade out of earnings with such companies when there is a price move indication. This is a Never Loss Trading top line chart for JP Morgan Chase Manhattan, and it demonstrates where there were indications for selling the stock into earnings and afterwards buying back into it. Yeah, so what happened? October 15, there was the earnings conference, but in advance here, our indicators on 9/13 told there is good potential to go short if the price of the next candle drops below $150.78, which was the case. Yeah, it didn't drop immediately, but in the means of the next 10 days, we were supposed to reach that second dot as a price move, or you could even trail your stop with the help of that red line here on top of that red shade, telling us that the market goes down. When it goes down, it is red. When it goes up, it is blue. So in short, right in front of the earnings call, there was a potential buy signal, but that wasn't confirmed, so therefore we didn't even consider it. And also we don't hold over earnings with our strategy. We trade into earnings on pre-indications, and we trade out of earnings at solid price turning points, and our indicators, they tell you what's going on, and we might have had some certain directional indication yesterday, by JPM, making that fall about 20 trading days in front of earnings. Essential for 2023 will be that you have some short selling strategies that you can execute even from an IRA. We, for example, teach the never loss trading delta force options trading concept, where you learn which option to pick, the maximum price to pay, and the returns to expect from these transactions. Yeah, so with a recession potential in 2023, somehow you need to be able to capture short selling moves in any type of account. That's very, very essential. And we'll do that with risk limiting strategies, yeah, not unlimited risk, so that you can move to the downside or to the upside, leverage your income and limit your risk. If you want to see all our strategies, we have a little outline we can give you. Write us an email, PDF 2023, and I send you the details into your mailbox. Keeping it brief here, we have 3 documents we can provide you where you can learn more about the details of our concepts and our strategies. Yeah? Traded Solid Indications, that spells out how the never loss trading principle and algorithm and AI goes. Earnings trades, so what I just referred to with the JP Morgan example, we go much more in detail of how to short and what we can do. And 2023 potentials, so where to invest and how to act. So write us an email, contact@neverlosstrading.com with the subject of one of those matters or all 3 of them, and we'll send you the details in a PDF write-up. So we are trading into earnings, out of earnings, and we usually don't like to hold positions over earnings. Why? Extended risk. If you have a high probability system that got you into the earnings call and out of the earnings call, why would you gamble over the earnings call? Here, out of earnings, I take an example, Apple computer, and you see here situation, early entry, indication, out of earnings, yeah, and here going long, and following through if you trailed it with the red line here on the chart. Is that doable? I think so, yeah, because after the earnings call, clear-cut indications of a rising price, this would be your trailing stop. Key is that the indications come and they're only fulfilled if the next candle ticks them out. That was the case in both of these situations that are highlighted here for you to follow along after earnings when investments came into the stock, and that can repeat itself, but it doesn't always have to be to the upside, it can also be to the downside, and this is why we are choosing the never loss trading delta force option strategy, because then you don't have to short stock necessarily, because not all stocks are available for shorting, and if you trade from an IRA, SEC regulations do not allow you to short stocks, and there's other conditions to it, so therefore we want you to have a strategy and teach that in our mentorships of how to follow each direction, risk limiting and leveraging to the upside or in the direction that you want to trade. This concludes our input to the earnings event. You get more details when you ask for our PDF where we explain more about it, but we want to keep it brief here and now give you a swing trading example, because you know they come all along, but you have to somehow find them and our systems help you. Yeah, so swing trading example, I take Goldman Sachs here. And we'll look at the following dates, November 2 to December 15. That's what you see on the chart, and I expand that a little in a moment. And you will have a long opportunity on November 7. Actually, the indication was on the Friday, November 4, and then got followed through and confirmed the next Monday, and then made that move to the upside. And also, we're looking at a short opportunity, November 29. 2022, where we had a short opportunity, 2 indications for a short that went to the downside. There was an indication too, but that was not confirmed, and we only want to act at confirmed directions, because then we have the market powers trading into our direction, fulfilling our goal to come to target. Yeah, so here's the expanded chart. So there was the first indication, November 1, buy above 358.38. That was fulfilled in the next candle, led to a trade to the upside. There was our goal, yeah, for the exit. It went a little higher, but that doesn't matter to us. We define for a predefined time frame the distance the price is supposed to do, and then we exit our trade. The same to the downside. There was our exit. The price went deeper. You will learn strategies to still continue on a deeper going price, but you will learn how our systems always will spell out the price direction, the initial point for entry, and with that you can work with buy stop, sell stop orders or conditional orders if you decide to trade with an option trading strategy. It is crucial to find those trades, yeah? And with our systems you have either the never lost trading alerts, where we have a subscription base and send them to you via email for weekly, 4-hour, monthly and daily opportunities. Then we have the top line scanners if you subscribe to that program, where you can do the work on your own, scanning market sectors. All is possible based on our indications. Or you have watchlist indicators, where you have a set of preferred assets and the watchlist indicator is telling you on which time frame the one or the other is ready for a price turning point, and you can participate in the resulting price move with it. When your time allows, day trading is a wonderful way of participating on the volatile price moves of the markets, and we'll show you some examples here. What we do is we act different, yeah. Aside that we also provide time-based oriented decision making, we developed a concept that we call timeless, because it is price action based only, and our computers spell out which price you choose and how you operate and act on the opportunities. Show you some futures examples. It also works for stocks, but futures have a wonderful ability for having high leverage on the one hand side in respect of what you have to invest to make a certain return. They are strongly diversified because we are looking between the euro to gold to crude oil to a stock market index, or if you want to have an agro product, it works for this one too. And so with that you have a wonderful opportunity going long or short. Here our first example is for the E-mini S&P 500 futures contract, and you see it here on November 21. Let me magnify it for you so that we both look at the same situation. You saw two indications, the one in the background you can't read that well, saying okay, sell me when the price drops below 39.55.50. That was certainly the case in the next candle, and then here the dot on the chart specifies your exit. So you were in a trade between 10.14 and 10.30. Yeah, so that's a nice trade, and you had enough time to act to enter into the trade with a bracket order, because what you see up here on the chart on the top here, that red bar, that was your stop for the trade, and it repeated itself here on the next opportunity by 39.54.50. Yeah, that was fulfilled in the continuation of the next candle, yeah, going to the upside, and here was your goal, there was your target, and you left the trade. Each of those trades is good for about $350 of a price change per contract. So depending on how many contracts you want to trade, we have a high probability system. We are banking more than 65% of the opportunities. So you saw that day the two opportunities, one short, one long, worked, and we are just looking at the time frame here between 8:25 in the morning and about 1 p.m. Yeah, so I'll give you more examples and from different days so that you see it's not only a one-day wonder, that's something that continues. On the same day, November 21, chart for crude oil, you see multiple opportunities that worked. Also one failed. If you took it mechanically, we would not have taken that trade. But here on the chart, I lined up mechanically every indication and looked if it came to target or not. So you saw here that was indicated, came to target, got knocked out, came to the bottom. The same on here. These two worked. If you took this one, it would have been stopped, coming to the red line. Yeah, that's part of trading. There's another short opportunity that worked. So you see here that was taken out, worked. Then we were in a trade when the second indication comes, so we could have added to the bill, or could have just exited the candle, and we do not enter on the exit candle. And then there was another short opportunity here around noon, and it lasted about 10 minutes and came to target. Yeah, you see these charts and these patterns repeat themselves. We act on high probability price turning points with the help of the never loss trading timeless concept and the indications that you have here on multiple issues where we go short or where we go long. Here is December 5 on the E-mini. Yeah. And you saw here working opportunity, working opportunity, working opportunity, and also this one worked. So you see a little longer time frame right from the start at 6 p.m. going all the way to 4 p.m. of the next day, following multiple opportunities indicated by our price points. You might say, why didn't you trade that? Because we do not trade in purple zones. Yeah. Purple zones are zones where we're not accepting indications, and that's always our system of never loss trading top line. It tells you when it's good to trade and when it's not good to trade. So coming out of the purple zone was a good trade, and that came to target. For the same day, crude oil, and in summary, yeah, without going through every opportunity, there were 8 winning trades and 3 losing trades where the system failed to indicate the right price direction, but that's a 73% attainment rate, which is above our 65% goal and invites you into high probability trading. And here are 2 further examples. First of all, the E-mini on December 13, a lot of price action to participate in, and you see the majority of the directions worked. There was also a failure, but that's part of trading. You'll never win 100%. You work with a probability and high crucial price turning points. Yeah, so you see here we have certain indications in the background with these shades. They all have a meaning, and we teach you the details in our mentorship, because if trading was easy, nobody would ever go to work, but it is learnable, and that's what we do. We help you with the systems, and we help you with the strategies to participate at crucial price turning points. Same day, December 13, crude oil, you see first opportunity worked, so did the second, the third, the fourth. There was no trade. Why? These channel borders we don't trade against because they attract and reflect. Here it reflected. If we took this trade, it would have been stopped, but still would have been high probability. But we'll teach you how to select good trades and bad trades. But here on the chart, I always take the trades mechanically. Every indication is considered. And so with that, if all of them were taken, 1, 2, 3, 4, 5 winners and 1 loser, that's high probability trading, and we invite you in to see live with us, if you are interested in working with us, how this works and what it can do for you. We have a couple of packages for serious traders. If you are a day trader, the timeless concept full package will work with you to get you into that, but it'll also require an investment from your side on time and learning. Then swing trading, top line is the top of the line, and if you're ready for that, we developed a new indicator that will be an addition if you subscribe. And if you're a beginning trader, you will have most likely a lower budget, then our trade colors concept would be right for you. And you always can upgrade from there to a higher level system. More than 50% of our clients, regardless of what they buy with us, upgrade because they want to have a higher participation rate in great trading opportunities at crucial price turning points. Are you ready to make a change to your trading and participate at crucial price turning points? Write us an email, contact@neverlosstrading.com. We organize an online meeting with you to see what suits you best. Here again the 3 PDFs that you can obtain from us, and we send them to you for free. Yeah, just indicate which one you would like to have, or if you want to have them all, write all, and contact@neverlosstrading.com. We are more than 10 years in the trading education business and help many traders and investors to get independent and make sound decisions at price turning points. So if you're interested in working with us, contact@neverlosstrading.com, and we are happy to get together with you and find out from our offering what suits you best. Thank you very much for your attention, and we are happy to hear from you. Bye-bye.